The Magnificent Seven are still leading the stock market higher, while Dow Jones and small caps are lagging. This is causing some of the market breadth divergences that we've been observing. We'll look at junk debt as it could be signaling at least a pause to the stock rally. We'll look at gold as dollar approaches highs and dollar strength is weighing on gold as it struggles. Oil finally again hit the price floor around $65 and bounced higher. So far, no breakdown below $65. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, the 13th of December 2024. Please hit the like button, subscribe to the channel, share this video, ask me any questions you like. If you're a subscriber, stay tuned. We'll have quite a bit of stocks to cover for the members only video, market breadths, various ETFs, large cap stocks, as well as several of the speculative securities that we're going to be covering. Looking at S&P 500, we're trading next to records, so no change there. This week another record was set on the 6th of December. For now, it looks great. When will it end? Nobody really knows. We are looking for opportunities to buy when the stock, in this case S&P 500, is around the blue line, and then we just buy it there. You can just clearly see it on the chart. There is no need to really even explain it, but basically these indicator lines are my design. I designed them. I pretty much use them all the time, and we're looking right now to just hold the positions. If we have any of the long, we bought the position, we're just holding them for now. If or when we're going to get a pullback towards the blue support resistance line, such as we did back in October of 2023, we will again consider buying. But at this point, there is no really a good opportunity for S&P 500, so we're just holding it basically. Good opportunity to buy would be around the blue support resistance line, so it is about 8% away from today's prices to the downside. Magnificent Seven. So what's in it? Tesla, Apple, Google, Microsoft, Amazon, Facebook, Meta, and Nvidia pretty much are unstoppable and again hit all-time highs here on the 11th of December. Again, this is how can I put it? The generals. The generals are leading the army of stocks higher, and you can see the generals are definitely not retreating, and in fact they're attacking. So for now, again, we're looking at various large cap stocks, such as within this ETF. We're looking for opportunities to buy. Magnificent Seven, of course, is a large percentage of NASDAQ, QQQ. So QQQ by extension hit an all-time high. And again, this is the opportunity to buy. You can see that we pulled back towards this blue support resistance line back in August of this year, and then we bottomed, and then we closed above this blue line right there. So once again, all you need to do is just have these indicators, and you can have them on your chart. These indicators are available for tradingview.com. You just need to sign up on my site. So QQQ, NASDAQ, together with Magnificent Seven stocks are leading the market higher. Dow Jones, on the other hand, is pulling back. It's very interesting that is happening, but you can see that it's a very interesting pattern. Kind of look at this interesting pattern, right? It just keeps pulling back. It opens and then it closes and it opens at yesterday's close and continues lower, opens at yesterday's close, continues lower. So it's just like a stair step down. I think it's going to come to an end very shortly. For Dow Jones, we're basically looking at this green line, which is basically less than 1% away, and I think there will be support found at that level. So this is what I was referring to, is that we have sort of a split, whereas we have QQQ and the Magnificent Seven moving higher, the Dow Jones is moving lower. So there's a divergence right there. Additionally, the small caps IWM are also under pressure. So this is I believe this is a 52-week high. Let me double check if it's an all-time high for IWM. Oh, it's an all-time high. So small caps hit an all-time high right there on the 25th of November, and basically been pulling back since then. So within this ETF, there are 2,000 stocks. So again, the market breadth, which will be covered in the members only section, shows this kind of divergence. It shows that the index of S&P 500 is moving higher, while the underlying number of stocks are actually moving lower. So this is where it's coming from. We see weakness in the small caps. We see weakness in the Dow Jones. There are several other sectors that are also somewhat weak, and other sectors that are insanely strong, like technology, for example. So it's a bit of a split right now. I think that the move higher is much more likely, and I think the support will be found pretty soon. And additionally, on a very short-term basis, like within about a week out, I think the S&P 500 is a bit oversold, actually. So we are most likely going to be expecting a move higher in the next few days to few weeks. Maybe that's what we call a Christmas rally, which is coming up pretty soon. Let's move on to high yield bonds. So we're currently looking at JNK, ticker symbol JNK. And as I don't get tired of repeating, high yield bonds and stocks. This is high yield bonds on a weekly basis. And down below here is what's called correlation coefficient. So you can see that high yield bonds and stocks correlate quite highly. So this is the reason why I pay attention to high yield bonds, junk debt. And so right now we're looking at this high. This is an all-time high on the December 12th, yesterday, Thursday. The shape of this candle is what gives me a little bit of a worry. So you can kind of understand what I'm trying to say. So look at this large tail out of the top. So this is an all-time high, but then basically we sold off afterwards. And I'll also notice that this is a what's called a shooting star candlestick that occurred here on the 12th of December. So the open is above the close. Close was below the open, and in fact close and low are the same price. So this is a classical kind of shooting star candlestick, and additionally today we had a follow through to the downside. So definitely a rather bearish candlestick combination of these two candlesticks. So maybe we're seeing a little bit of a finally of some sort of a tapping pattern that's showing up at least in the junk debt universe, and it could eventually translate into weakness in other sectors. And like I said, we have already certain sectors and certain indices which are lagging. For example, small caps, Dow Jones are lagging. So I wonder again if this high yield bond weakness is a signal that we might be tapping at least for a little while. So very mixed markets. I'm getting mixed messages here, and I'm sure you're hearing the same thing from me, because like in one sentence I'm saying that NASDAQ is outperforming together with Magnificent Seven, and another sentence I'm saying Dow Jones and small caps are lagging together with high yield bonds. So it's definitely a mixed market right now. Long term, nothing has changed. We're in an uptrend. We're looking for opportunities to buy on any pullback. All right, let's switch gears. We're currently looking at US dollar currency index. Dollar currency index has broken out into a new uptrend right there in October of this year, and made a 52-week high. So strong dollar usually weighs on various commodities, and gold is one of those commodities on which it could weigh. So currently dollar is approaching 52-week highs, but at the same time gold is also approaching all-time highs. So gold and dollar normally behave opposite. So if dollar goes up, gold goes down. But of late, the relationship has not been as clear cut, and so we're seeing dollar and gold move together up. Having said that, just looking at this chart right there, we're seeing potential resistance at previous highs from November of this year, and 2 days ago on Wednesday, and then again on Thursday, the 12th of December this year, 2024. Gold came up to that same level from November 22nd, November 25th area, and kind of bounced back. So we're right now seeing whether or not this is indeed going to be a resistance for gold. Gold miners, by the way, are not acting great either. So I'm just going to show you GDX gold miners. Technically speaking, we should be buying them. We have a signal already. So what's the signal? We have a security that goes up, it's going up, and then pulls back towards the blue line, and then closes above it. So there's the signal on the 19th of November to buy. But it just hasn't really gone anywhere, and now we're back below blue line. So I wonder again if gold is stalling, and maybe this is going to be it for gold. Maybe it will soon roll over. So we will see again if this is going to be the case. But for now, we don't really have any positions. I mean, if you have gold, if you like holding gold, then it's fine. But I'm not sure I want to open any new positions until gold gets to about 2,500 basically, because notice what happened before. Again, pretty obvious chart. So we buy when we see a close above the blue line, for first a low or a close below the blue line, and then a close above it. Did that make sense? If that didn't make sense, just make a comment. Some people just for some reason don't get it. It's a pretty obvious thing. We have a pullback towards the blue line, and then we buy it once we touch the blue line basically, and then close above it. Right now, nothing. There's nothing. We don't have a signal. I mean, this latest signal from 15th of February of this year is still in force. So I would be just holding it basically. And finally, I wanted to show crude oil. So crude oil is technically speaking in a downtrend. You want to be selling it. However, it looks like we got to this price floor, and notice multiple attempts by crude oil to break below this. So we have September 11th, early October, late October, mid-November, and once again here in December of this year, the price is attempted to break below this price floor of around 65, and they were never able to break through. And then again, now we're seeing a rally, a small rally over the past few sessions. So I wonder if this is not going to break down yet again. I'm going to show it to you on a weekly chart, on a longer term chart for crude oil, and you can kind of see the same area, but from, you know, even further out, like from November of 2021. And then we have we had touches of that area in 2023 in March and into June, and again in December of 23, and then once again I just showed it to you this year, multiple occasions, and still we're not able to break down below this around $65 area. So who knows, maybe crude oil has bottomed and again now might continue higher. It's entirely possible. I don't know why. You know, many theories have been put forward of why things happen. You know, as far as technical trading is concerned, we don't really care why things happen. We just care what's going on. Like, do we want to be buying? Do we want to be selling? Do we want to, at what price level we want to be buying or selling, etc. So for now, we're looking at crude oil, and I don't see, you know, either a good opportunity to buy or a good opportunity to sell. If oil gets to 73 and sort of tops out there, so like we had on multiple occasions here, for example, you can see oil topped out around the red line. So the red line is $73, and if it gets there and tops out, and then we want to be selling it short possibly. But for now, I just don't want to be doing anything with oil really. All right, let me know what you guys think. Make a comment. Head over to MasterChartsTrading.com. Sign up for one of my products. I have the trading indicators, these lines on the chart, this green, blue, red, and yellow line. You can trade pretty much anything you like. They're available for TradingView.com. All you need to do is sign up on my site. I will open the door for you on TradingView.com. Newsletters, so I send out daily alerts about various securities, and then weekly members only video, which will be covering a whole bunch of various securities you can see on the screen. Of course, the best deal is to get both trading indicators and newsletters together, and as always, you get free 7-day trial, so you have time to cancel. The best deal, of course, is to get the yearly price, and then you save almost 20% compared to the monthly price. Let me know what you guys think. Thank you for watching, and have another great trading week. Bye-bye.